Okay, traders, one of the most significant factors in determining how much money you're going to make as a trader is very much how much capital you can put behind you and how much you can leverage your skill as a trader. So what we're going to be discussing in today's episode is all about leveraging prop firms, a great opportunity to scale up your trading and to leverage your skills as a trader to make more and more money from the markets by technically not changing the amount of work you do, doing the same amount of work, but you're making more money. Okay? If you find this episode useful, make sure you share it with your trading communities. And if you haven't already, make sure you do the trading psychology archetype quiz. That quiz is a game changer. It's going to share with you which of the 4 trading mindsets you have. And it's also going to give you a free personalized report sharing exactly what you need to do to get from where you are to consistently profitable. Now, the first idea I would love to share with you in terms of prop firms is a prop firm is very much a magnifying glass, and it very much leverages who you are and what you do as a trader. So if you have poor habits as a trader and you don't have a trading edge and you haven't proven that trading edge, you don't have a mechanical trading plan, and you haven't worked on your mindset, you haven't worked on managing your expectations before you trade, you haven't worked on managing fear and greed after you trade, you don't know how to get yourself back to this state of equilibrium, you haven't done any self-work to keep yourself in a poised state of equilibrium when you're trading and you're all outcome-based and you're not process-focused, then guess what? You go for a prop firm and it's only going to magnify those negative characteristics you're doing as a trader, those things you're doing as a trader. And as a result, you're going to have more stress and you're going to have more emotional trading and you're going to lose more money because you're buying these prop firms and you're going to get stuck in this cycle of losing a prop firm, wanting to buy another prop firm challenge, etc., etc. So a prop firm isn't a magic bullet. It's not going to make you a better trader, but rather if you have the proper processes established, let's say, for example, you've watched this trading psychology series and you've implemented your edge and you've implemented your mechanical trading plan and you've learned to manage your expectations, and then you've maybe gone part of the 12-week program and you've studied the trading psychology deeply and you're implementing the tools there to help you address the subconscious stuff in your mind, and you put all the tools and processes I share with you there, and you've empowered your psychology and your mindset, and now you're a process-based trader that has the proper processes with your trading plan, with your edge, with your mindset, and you've established all those things, and you've done the inner work to be able to manage higher stress environments and emotions and trading more and more capital. Then if you then go for a prop firm, then guess what? The prop firm is going to magnify all those positive attributes you carry as a trader, and you're going to make more and more money as a trader. So a prop firm isn't going to make you a better trader, rather it's going to magnify how you currently are as a trader. If you're an emotional, non-process-based, outcome-based thinking trader that's stressed and isn't making money, then the prop firm is not going to help. But if you have all those components established and you built all those foundational components, then you're in a great place to now scale and leverage your skill as a trader with a prop firm so that you can make more and more money. And really that's what it is. A prop firm is a very low barrier to entry and affordable way to get access to greater amounts of capital. But do not go for a prop firm if you haven't established the proper foundational steps. Firstly, so this is part 1. Firstly, there are steps that you need to go through, and we've elaborated on them throughout this series, but let me summarize them again. The first step is you need to make sure you have a trading edge that is profitable and you're certain that it's profitable. You then need to put that edge into a mechanical trading plan, and then you need to manage your psychology so that you can manage fear and greed, you can manage your expectations, you can manage all your emotions so that you can stick to your mechanical trading plan and that you can stick to your edge. Now, in order to have consistent profitability, you need to have an edge, but most traders don't process or systematize that edge, so every time they come to the market, they're trading slightly differently, so they never approximate their edge. So if you have that mechanical trading plan that outlines your edge, then you're going to overcome that hurdle. And then if you have a mechanical trading plan, but you don't learn how to manage your psychology, fear and greed, you're not going to stick to your trading plan. So you need to manage your psychology to be able to do that. And then you need to structure your life, all areas of life, 7 areas of life, in a way that allows you to consistently execute on your edge with your mechanical trading plan with a balanced psychology, and you have that structured, and you've got that segmented in your life with your work, with your relationships, with your social life, with your health and fitness, with everything else you do, so that you can consistently, and really the goal here is about being consistent in your execution of the process. That's what's going to yield you the profitable outcome. So then once you've established these components, these are all foundational components, you have to build the layer before you can build the layer on top. Then it becomes wise to look into prop firms and scale with prop firms. Okay, so this is what we're going to talk about today. Now, part 3 of this, people then assume, all right, I've put all these components in place with my trading. Prop firm must be this all positive golden opportunity, and they become infatuated with the prop firm. And you've got the trader here, and then what they do is they put the prop firm way up on a pedestal up here, and what they've done is they've infatuated with the prop firm and they've self-minimized. They now all of a sudden have no confidence. There's a few things that go on here. They're consciously aware of the benefits of the prop firm. They're unconscious to the drawbacks of the prop firm because they're infatuated with it. They're seeing more benefit than drawback. That in turn leads to self-minimization and lack of confidence. So what I encourage traders to recognize is that the prop firm itself is neutral. The prop firm is a tool. It's a leveraging tool. All right? But if you're infatuated with it, you're only going to see the benefits of it, and you're going to label it this great thing that's going to save your life, and you're going to be infatuated with it, you're going to self-minimize. Or some traders swing the other way, and they get so angry at prop firms, and they think it's this evil thing, but reality is the prop firm has both advantage and disadvantage, has positive and negative. It's a neutral tool, and traders, based on their experiences, just project their own experience into the prop firm. They label it either good or bad. So what I really encourage traders to recognize is that the prop firm itself, in actuality, is just a neutral tool, and you want to see it for what it is. So if you've got a prop firm way up on a pedestal, what you need to do is you need to become aware of the drawbacks and the risks of being a prop firm trader and trading prop firms. And there are some real risks and drawbacks that you need to be aware of. One of those is the market is shown to be a little bit unsustainable and a little bit untrustworthy at times, really. Some of these very good prop firms out there are going under. So the reliability of some prop firms, even very reputable brands and reputable prop firms, is not all that rock solid. So there's a potential longevity issue there. The prop firms may not be around for as long as you expect them to be, right? Some may boom and bust. So there's a longevity issue here. There's greater amounts of stress in your trading when you're trading prop firms. There's greater levels of accountability when you're trading your prop firms. There introduces this added layer of stress and fear when you have a prop firm, because now you don't want to lose it. So there are true drawbacks and risks and disservices to being a prop firm trader. Some other risks could be payout risks. There are some counts of prop firms not paying out traders. There are some changes in regulations and governments that restrict some prop firms to working with certain countries and restrict some prop firms in operating in certain legislations. So there are real risks and real drawbacks you have to be aware of with a prop firm. And the reason you want to become aware of them is to take the prop firm off the pedestal and see it for what it is. Don't put it into something that you now resent, but rather see it as this balanced tool, this leveraging tool. This tool has both advantage and disadvantage. And when you become aware of the drawbacks here, you can then plan contingencies and processes for each of the drawbacks so that if they do happen, guess what? You're prepared for them. You've planned a contingency or a process for it. You're not blindsided, and you're not, oh shit, I didn't expect this, but you've prepared for it, and you've got a plan to manage that particular drawback or that particular risk, which we're going to talk about next. Okay, So take the prop firm off the pedestal. It's not this life-saving thing. It's just a tool, just like a hammer. You can use a hammer to cause harm. You can use a hammer to build hospitals, right? So the tool itself though is neutral. You choose how you use it, and you choose your interpretation of it. I encourage you to see a prop firm for what it is. It's a balanced tool. That way you're not infatuated with it, fearing its loss, because whatever you're infatuated with, now if you get that thing, you now fear its loss, you have more stress and anxiety when managing it. Or if you resent it, guess what? You're not going to take advantage of a great opportunity, and the prop firms are great opportunities. So I encourage you to have a balanced perspective on the prop firms. If you're resentful, find the benefits of the prop firms. If you're infatuated, find the drawbacks. Get yourself back to this neutral state. See it for what it is, be aware. And any drawbacks or risks you can foresee, plan and prepare for them so that you're prepared if they do come true. Okay, and this leads me on to my next point. It's very important to be diversified with prop firms. And one of the big drawbacks that you will identify when you list the list of drawbacks with prop firms is sometimes the unreliability of these so-called reputable prop firms. So it's important to be diversified. And what I suggest is you establish funding with one prop firm, and you get an account with them, and then you get another account with a second prop firm, and depending on how much your resources, you can wait for your first payout here and then roll it into the second prop firm. But the second prop firm has to be a completely separate company in a completely different legislation area in a different country, and then do that one more time. So you've now got 3 different prop firms across 3 different countries and legislations that you're now trading with, and that's a high level of diversification. And you can maybe get another one, and maybe you get 200K allocations with all of them. Maybe some allow a little bit more. I know with Telos Capital, our prop firm, we can do a little bit more with some of the accounts. You can get 200K accounts, you can have 400,000, or you can scale all the way up to $4 million US dollars with some of the accounts we offer. So we've got great scaling plans, and you want to be diversifying across your prop firms, have multiple prop firms, and then focus on scaling within those. But always remember not to put too many of your eggs in the one basket, because if that prop firm goes under or it ceases operation, then you're now vulnerable in that situation. Okay, so diversify multiple prop firms, have multiple companies, and then scale those prop firms. And always be aware that even though it is a reputable brand and you may not think it's going to have any issues, always keep that at the back of your mind and always stay diversified. And really, I encourage every trader to set a goal. And if you're watching this, if you're going through the series, I encourage you over the next 3 months to set a goal of picking up your first or your next $100,000 prop firm account with a separate prop firm. If you already have an account, a different prop firm, and recognize what are the action steps that go towards that. Well, firstly, you want to double check that you have certainty in your edge. You want to put your mechanical trading plan together. You want to then manage your expectations before every trade using the Bulletproof Your Mindset tool. That's in the description. And by the way, I've got my 6-figure trading plan template in the description as well to help you put that together. Then the next thing you want to do is you want to address your subconscious mind, and you want to redefine what winning and losing mean to you. Because if you have all this positive dopamine associated to winning, you're going to seek after winning, and you're going to stick to your plan. If you have all this negative associated to losing, you're going to try and avoid losing. You're not going to stick to your plan. And this is all subconscious stuff that's logged in your subconscious mind. You have to redefine winning and losing, see neither as good or bad, see them both as neutral outcomes, so that you can transition from outcome-based thinking to process-based thinking on a deep level. That's something you can learn in the 12-week program. And then what you want to do is you want to structure your life to ensure that you can focus on the process, the execution of the process, which is now, doing your mindset work and then adhering to your mechanical trading plan with balanced expectations before every trade you take. And then you want to go for the prop firm, and you want to go for a no time limit prop firm. You may even want to establish a drawdown protocol. So if you go deeper into drawdown, you lower your risk, so you give yourself more of a buffer from hitting the drawdown. And what that can do is it can help protect your psychology so that you don't start to panic and go into fear and revenge trading. So you can put a drawdown protocol in place. And then really what you want to focus on is just consistently adhering to the process. And really that's what being a successful prop firm trader is all about. It's about, now that you've established the proper processes, consistently adhering to those over a long period of time, and then you'll get your result if you've established these proper things initially. Okay, so this is how I suggest traders to approach prop firms and to understand prop firms and how to think about prop firms. They're a great leveraging tool, but you always also want to see them in a balanced light so that you see them for what they are, not this lopsided interpretation that many people market and many traders put out. Okay, if you have any questions on this, let me know. Thank you for watching to the end. If you found this useful, share it with your trading communities. And if you haven't already, make sure you do the trading psychology archetype quiz so you can go in there and find which of the 4 trading mindsets you have, address the trading psychology issues you have, and get consistently profitable, get funded, get payouts. Okay, look forward to seeing you all tomorrow.